Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about Snapchat's earnings miss, the crazy used car market, and the recent estate tax changes. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. Snapchat missed earnings last night and the stock got crushed. What does this mean for tech stocks?
Hey, good morning, everybody. Thanks for that intro, Allison. And yeah, I've not been a long-term fan of Snapchat, the stock. And so I do kind of chuckle when they miss earnings and the stock gets hit like this. And the headlines were immediately, oh, snap, last night when this happened. But if you take a look at right here in red, they're down 32% now. Was 20% right away, and then it leaked all the way out to like 28%, now 33%. There's not a lot to like here. You can love the app, but hate the stock, right? So really, when you look at what happened, they had the worst growth since the IPO. So the most disappointing type numbers across the board. They talked about a hiring freeze. It's just not where you want to be as far as where the, having your capital behind this. Then a whole slew of downgrades came in behind it. But however, what the bigger issue is, so if you don't like Snap, you can look at the Snap chart here and say, okay, you don't like Snap, but how does this affect others? Well, here's the 6-month chart in Snap from 40 down to $11, so whopping, what's that? 73% rough math loss from the highs. You say, okay, well, how about names we do like that are also in the same space? Facebook is one of them, Meta. So you look at Facebook stock, and the chart, if I could type they're down 5% this morning based off of this news. There is some bleed over. So why would that happen? Well, it kind of goes back to the old, Coke and Pepsi used to be like the two arch rival companies, right? So you would think that if Coke missed earnings, Pepsi would go up. Absolutely not. Right. So and why not? It's because they're rivals. Well, if those are the only two stocks out there, that's exactly what would happen. But there's all kinds of index funds out there that include both Coke and Pepsi. So when Coke goes down, Pepsi gets drugged down with it. Fairly or unfairly, you decide. But it also does give a buying opportunity when you have like Meta sitting out there that has very little to do with Snapchat other than the fact they're in a bunch of the same index funds. And you look at the pain train that Meta has been, but not nearly as much, right? 325 down to 170, 173. So it's a down for sure, but there's a lot of about Meta, unless you just hate Zuckerberg. I get that. Some people do. I think that's being a little personal, but the VR stuff, the metaverse, in addition to, Meta has so many initiatives out there. It's really pretty impressive. And you look at the numbers associated with Meta, 13 PE for a company of this size. So I don't know. I think this is so overall, this can create an entry point on some other stocks that are out there. So, stay away from Snap and, look at some other names in the space. Meta got hit. Google got hit a couple percent this morning. Again, that's unfairly. That's just bleed over from Snapchat.
Next, the used car market continues to be on fire with people paying around 10 grand over the normal price. Will this continue?
Can you say bubble? Yeah, this is crazy, right? So $10,000 more for a used car right now. So yeah, if you have an extra car and you're willing to unload it, now's the time. Absolutely. This can't last, but it also will not go away anytime soon. So look at this number. This is insane. The average price for a used car is $33,000. Now, okay, I'm getting old. I do remember when cars did not cost $30,000, and you could get cars for like 15 or 20,000. They're brand new, right? So it's kind of just shocking to see 33,000 for a used car. But this is crazy. There's a chart down here, and it's the chip shortage, and it's going to take quite a bit of time actually to kind of work its way through this. There's their headline, "A Long Road Back to Normal." That's better than the words I chose. But this chart here I thought was interesting. So a car that's 1 to 3 years old, you're paying an extra $13K on top if you want to buy it. 4 to 7 years old, an extra $9K, and then once you get outside of 8, then you're paying about a $5,000 premium. All in all, It's kind of crazy. I do think the transportation space could go through some massive change in the next couple of years. If you remember, kind of rewinding the clock, Tesla stock had good earnings yesterday. Stock went up pretty big, almost 10%. So congrats to all the folks that are out there that own Tesla stock, that is. Of course, the car is amazing, stock questionable. But if you look at the future of transportation, the big draw for Tesla is robo taxis, self-driving, kind of thinking it's almost like a movie, right? To where these autonomous vehicle shows up and it takes you wherever you want to go, and it just works itself out. Or like the analogy I've used, the scooters that are laying all over downtown Austin, now it's going to be cars that are just going to be parked everywhere, and you pull out your phone and boom, 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 there's a car for you, and it takes you, and then you ditch it wherever. Apple's also talked about the same thing, but they've been quiet on that for like over a year now. But transportation could change, and certainly it's not helpful if used cars are more expensive, right? So if if you will, the younger generation, or every younger generation, right? The new drivers out there, if they decide that car ownership's not for them, and they want to use Uber full time, so it could change the industry. But right now, if you don't need an extra car, don't buy one. And if you have an extra car, take a look at maybe unloading it here for a premium.
Last, the IRS just changed the portability rule for estate taxes. What do folks need to know about this change?
Okay, the estate tax law, and first of all, not a lawyer, so that's your disclaimer right up front. So seek legal advice, or if I do have somebody out there, if you catch anything that I say here that's incorrect, put it in the comments. Let me know so I can correct it, right? But when I read this, right now the estate tax law is at 12.06 million. Make sure my number is correct. There to go. 2022, 12.06 million exemption per person for gifts and estate taxes. Okay. So a lot of people are like, well, let's tune out now. I don't have 12 million. Well, you might want to stay on top of this. So here's the scoop. So here, I'll say why first. First of all, it just takes politicians waking up in the morning and deciding to take the estate tax law from 12 million down to 2 million. And now for, a lifetime worker that saves and invests and puts a nice nest egg away. Now, all of a sudden, now that is in your wheelhouse, right? You're like, wait, what? I thought this was 12 million. Now it's 2 million. It's like, now problemo, right? Because now you're here. Good problem to have. I get it. But if you are wherever the estate tax is, there's this thing called portability. And portability is, I don't know why you have to file for portability. That it should be automatic. But anyway, the IRS, the change here that they're talking about in this article is the portability is moved from 2 years after your spouse passes away. So there's two of you, one passes away, the other person has up to 2 years, old rule, to declare portability. And that way they can get the whole 24 million passed on to them. It seems like that would be the law anyway, but now you have up to 5 years to claim portability. I can't think of a situation when you wouldn't claim portability, but hey, if you're out there and you can think of one, put it in the comments, let me know. But now you have 5 years to claim it. So a little bit longer to kind of square the estate and get everything set away. If you want the definition, here it is, passing one assets to the others. Obviously, if you're at that level, you should have a lawyer involved in what you do. If not, you're just being cheap. So bring a pro in on your side, and that we look to have an in-house lawyer here in about 18 months here in Ankerstar Wealth to be able to assist with these sorts of things. But right now we do not have that on hand. But yeah, it says here almost no brainer, right? So just realize that there is something in most couples, there's generally a money sheriff. Just like everything else, cooking sheriff, or you split the beauty of a marriage. You can kind of split roles and have your own places of expertise. Certainly, if the money sheriff passes away first, though, that can cause a problem for the other person who hasn't stayed on the cutting edge of all this stuff, right? So just make sure if this happens to you, or if it happens in your family, that you mentor your parents on this rule. That you should. I can't think of a reason why you wouldn't do it, but portability exists, and you can kind of sit down, get smart about it yourself, and then learn how to declare it for them. But that's a little bit on estate taxes. And again, just to close here, I would say just because it's up at 12 million per person, so okay, 24 million per couple. Remember, that's just the stroke of a pen, and that comes right back down to some of the old numbers we used to have, like 1 million or 2 million. So thanks for listening.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here Monday.